In today's video, I'm going to be sharing with you my trading plan for next week covering DXY, Euro dollar, pound dollar, US dollar yen, US dollar CAD. Plus we're going to look at gold and silver, and we're going to be looking at a number of other Forex markets, which are setting up nicely heading into next week. For those of you that are new to the channel, my name is John Fortune. I've been trading financial markets for over 18 years. And everything we do at GMT is in real time, is time-stamped and accounted for. And to kick off 2026, we are releasing completely free the 82-page Get Me Trading Forex Strategy Guide. This strategy guide covers the 6 core setups that we've been using in real time with members over the last 3 years to generate over 400% returns. Now, all of you can click the link in the description below or click the link in the pinned comment below, and you can download your copy of this Forex strategy guide. I've done everything I can to pack this with value. I don't want to give you any half measures or any fluff, because ultimately that's just going to cause you guys to lose trust in what we're doing. So I've really tried to pack this out with as much value as I can, whilst making sure that it's easily consumable and not too overbearing and too in the weeds. So for those of you that download this free strategy guide, what you'll be able to do is you can either use the techniques in this strategy guide to augment or adapt your own trading strategies and kind of add them in, or you can actually use these setups with the Forex analysis that we're doing now every Saturday, and you'll be able to follow along knowing the exact setups that we're going to be looking to trade with this video throughout the week. So again, those of you who would like to download this completely free, all you have to do is go and click the link in the pinned comment or click the link in the description, and you can download this strategy guide absolutely free. And I'm absolutely certain that many of you, if not all of you, will get a ton of value from this strategy guide. And remember guys, if you feel like you get value from these videos and that it helps you in your trading, be sure to subscribe to the channel, because it really helps the channel when you do that. And I really appreciate all of you who have subscribed to the channel so far. So with that said, let's jump into the markets for this week, starting with the DXY. And one of the things we're going to do this year with the Forex analysis at the weekend is we're going to be starting each video with the dollar index and also the dollar pairs. And then we're going to move on to the portfolio selection, and then we're going to look at the other Forex markets, which are setting up nicely for the week ahead before, as always, finishing with gold and silver. So what's interesting about the DXY here, and we have this on 4 time horizons, the daily, the 4 hour, the monthly, and the weekly. You can see in the monthly, we're just sitting underneath this prior low. So we're kind of attempting this breakout to the downside, and we cannot really say on a monthly time horizon whether or not this is going to succeed, or if we break back above the 100.157, you know, in the bigger picture, then obviously this would be a failed breakout to the downside, and this would actually put a retest of the highs back into play. Now, looking at the monthly time horizon, you know, this takes a long time to play out. And as it currently stands, the fact is we are below the key level of 100.157. So even on a monthly time horizon, not only are we below that, we're below the 20-period moving average, which we cover quite a bit in the strategy guide as well, and show you how you can use that with these setups. But overall, we're bearish, you know, in the monthly time horizon, and we're consolidating. And this is clear in the weekly time horizon. We're actually stuck in this range. We failed at the top and we failed at the bottom. So now we have a well-defined range in the weekly time horizon. So we are categorically bearish in the dollar overall, but we're currently consolidating. And this kind of brings us to the daily and the 4 hours, because, you know, looking at the daily here, you might be forgiven for thinking, okay, we're breaking out of this kind of downward sloping trend line. But there's a couple of things to notice here. One, although we're starting to close outside of this, we're still at the 20-period moving average in the daily. So the fact that we're at that and below it shows that there has really been no trend change here based on the 20-period moving average. But also, look at the prior high in the daily. We have not yet breached the prior high. And this is where, you know, these kind of downward sloping trend lines, they can lead people into a trap a little bit sometimes, because until you've taken out the prior high, this is still trending to the downside. You're in a downtrend. So we do really want to be treating this as bearish. You will see when we go through the video that dollar shorts are at the top of my list heading into this week in terms of some of the best ideas. And just to cap this off, we can look at the 4-hour time frame here as well. You can see, although we're breaking out of this downward sloping channel, look at how we're breaking out of this. We're going sideways. Very often, if you want to break out of this, you want to see kind of shorts pulling their position, short covering. You want to see momentum to the upside. So the thing I'd be looking for next week in the DXY is look for price to break back down below the moving average as it kind of fails at the daily. And I'd be looking for this to start to make its way lower. And within that, you know, we'll see most likely a run to new lows, which in this case as well, you can see down here, once we break these lows, this puts into play the bottom of the range in the weekly time horizon. So overall, going into this week with a bearish bias on the US dollar and dollar shorts are some of the best setups going into next week that I'm going to be looking at. Okay, so moving on to the dollar pairs, starting with euro dollar. Now, what setup am I specifically looking for next week? What I'm going to be looking for next week is this. We can see the blue level here at the 1.16368. Again, this is covered for anybody new in the free strategy guide, but this is where we turn oversold during the week. This is where we turn overbought. But I always have a directional bias first, and euro dollar, it's to the upside, which means not necessarily that this is going to go straight up, but it means I can only be a buyer of this market. So I cannot get involved in shorts in this market next week. So I want euro dollar to come down next week, and it's an if-then process. If euro dollar does this, then I'm going to pull the trigger on an opportunity. If euro dollar comes down, takes out the 1.16368, which is really the first thing we're going to be looking for here. Can this market turn oversold? If it can, the odds shift in our favor for a high probability trade. And once we turn oversold below the 1.16368, we have a really nice daily low here, which is a type 1 horizontal support level. These are the best support levels, and we go through this in the strategy guide. But this is exactly where I'm going to be looking for a failed breakout to the downside next week. So I want to see price come down, turn oversold, and trade into the 1.1615. This is where I'm going to be looking for a 1 or 2 day bounce to the upside. And that is what I'm going to be looking for in real time with members next week. Next is pound dollar. I can only buy this market next week. I cannot short this market next week. So what I want to do is I want to see pound dollar breaking below the moving average, coming down, taking out the 1.3349. This is where we turn oversold during the week. And we have a really nice, again, type 1 horizontal support level here at the 1.3311. So I'd like to see pound dollar turn oversold, trade into the 1.3311. And for those of you who go through the strategy guide, what you'll notice is this will be oscillating around the moving average. This becomes a range play, what we call a range reversal. So I'm going to be looking for a trade into the 1.3311. And this is where I'm going to be looking for a bounce for 1 or 2 days to the upside. That is the setup that I'm focused on next week in real time. And I cannot sell this market under any circumstances. Next is US dollar yen. Now, although I have a bearish bias in the dollar, when we go through the portfolio selection shortly, what you'll see is that the yen is actually even weaker than the US dollar. So currency pairs are relative, right? If we have a weak dollar, but we have an even weaker yen, we should on balance expect, well, first of all, we should expect this currency pair to range because they're both weak, so they can't really find any direction against each other. But the second thing is, if we are going to start to see a resolution to this range, it's probably going to be to the upside. So look at the moving average here. It's completely flat, and we're oscillating around this moving average. So I want to see this come back down, test the range bottom. We turn oversold next week below the 155.09, and there's not one, but two really nice daily support levels here, both type 1s, which I would like to see price push into. If we get this set up next week, then I am going to pull the trigger on a buy opportunity down below here, looking for a 1 or 2 day reversal back inside the range next week. Next is US dollar CAD. Now I can either short this market or do nothing. I cannot buy this market next week. So what I really personally want to see is US dollar CAD to turn overbought during the week, and it does that above the 1.38209. So once we do that, we kind of enter this sell zone where the odds shift for a reversal to the downside. This is where we start to stack the odds in our favor. Now, the second thing we want is a nice key area of resistance, but in this case, we can see that the key area of resistance is kind of at the halfway point or a little bit higher. I like to see key areas of resistance if I'm looking to short from the sell zone, kind of within the first half. So because we don't really have that, anywhere near the start of the sell zone next week, I'm dropping down to the 4 hours, and you can identify a nice 4 hour high here at the 1.38233. So I'm going to be looking for this. And again, we're using this kind of as a dynamic trend line. I would ideally like to see this push up into the sell zone at the 1.38209. And as we trade into the 1.3823, this is where I'm going to be looking for a false breakout to the upside. I'm going to be looking for a 1 or 2 day liquidation back inside the range. Next is US dollar franc. I can either short this or do nothing next week. I cannot buy this market under any circumstances. And what's noticeable here is that there is no significant high even in the sell zone next week. The next one is up here. Now, what we do have is we do have a prior low. So this is where we get a type 2 key area of resistance, because it's not as strong as a market or a prior area of resistance which pushed price down in the past. In other words, you know, if you have a level like this and you trade into it, and again, this is all in the strategy guide, previous resistance becomes future resistance. In this case, previous support is set to become future resistance. So it's not as strong, but it's still okay. It's certainly viable. So I'd like to see price push up, stair step into the prior low, and in doing so, push through the 0.7996. As soon as we do that, this market is going to be overbought on the week. The odds of moving much further without a catalyst are limited, and that is going to, with a high degree of probability, see a liquidation, at least a pause. At least a pause. If you get involved and it doesn't work, I get out for break even. Again, all of that's in the strategy guide. But what I'll be looking for is a 1 or 2 day liquidation back inside the range. That's where I'm going to be looking to get paid in US dollar franc next week, if we can get that happening. So if that happens, then I'm going to pull the trigger. Next is New Zealand dollar. Now, both these currencies are weak. We'll see this in the portfolio selection next. And as a result, this market's just ranging. Again, look at the moving average. It's kind of starting to go flat. And so this sets up a range play, and I can actually short this next week, or I can buy this, because they're both kind of evenly matched currencies. So what that means is the markets shouldn't really trade directionally against each other. New Zealand and US dollar should just continue to range. So next week, I'm going to be looking for one of two things here. If the market pulls back and trades below the 0.5709, this is where we turn oversold during the week. I'm going to be looking for a potential bounce for 1 or 2 days from the prior stair step high at 0.5692. That's what I'm going to be looking for to the downside. And if reactively we break up, because it's a neutral market, if we enter the sell zone, I can also short it. And I would be looking for a short on a potential failed breakout above this high here. So here is a good example where we have actually a type 2 key area of support, and we have a type 1 key area of resistance. So this would be great if we can break into this area and test the 0.5852. I'm going to be looking for a 1 or 2 day liquidation back inside the range. And the final dollar pair before we move on to the portfolio selection is Aussie dollar. Now, I can only be a buyer of this market. Unlike New Zealand dollar, I can't short this market. So what I want to see is I want to see Aussie dollar coming back, going back into a ranging mode, and testing this type 1 support level at the 0.6592 in the buy zone next week. This is exactly where I'm going to be looking for a failed breakout to the downside. I'm going to be looking for this to bounce and snap back for a 1 or 2 day liquidation to the upside next week. Okay, so let's have a quick look at the portfolio selection. But before we do, something to bear in mind. In the economic calendar next week, we do have Aussie CPI on Wednesday, so something that is likely to move the Aussie pairs. And on Friday, probably more importantly here, is non-farm payrolls. So why is that important? Again, if you go through the strategy guide, you will see that when you have a big news event like non-farm payrolls, 1 to 2 weeks before the event, the markets actually tend to lack direction. Now, we're only talking in probabilities, statistically speaking, but especially with non-farm payrolls, very often you find the week of non-farm payrolls is quite choppy and quite range bound. So what this does is if we do get setups in, say, the dollar pairs, especially before non-farm payrolls on Friday, very often the ranges can hold even better than they would in a normal week because big money's not coming into the dollar. The big money kind of sits on the side, and then when you get non-farm payrolls, often you actually see big money booking profits on non-farm payrolls, but also retail traders will flood in and trade the actual print itself. And in fact, non-farm payrolls is a very, very good, in fact, one of the best pieces of economic data for the news trade setup that we trade, and that is in the strategy guide that you can look through. So bear that in mind going into next week. It does make US dollar shorts leading into non-farm payrolls something that's right at the top of my list. Now, very quickly, just looking at the portfolio selection for next week, you can see the Swiss franc is number 1, the Canadian dollar is number 2, and the pound is actually only the 3rd currency here, which has a green performance wheel in hedge dash and also a green momentum arrow. So those are the 3 that I'm going to be looking at trading to the upside. To the short side is the yen, the New Zealand dollar, and also the US dollar. So notice how we're talking about I could buy or sell New Zealand dollar as a pair because both of these are very weak. So it kind of doesn't really matter. That market should actually hold. Now that could change on Friday. Perhaps you get, a really big miss or a really big upside surprise in the non-farm payrolls report and you start to break out, and you maybe get a stronger dollar next week, but certainly lean into it. Those two currencies should hold their range. So what we're going to be looking at in today's video primarily then is US dollar franc to the downside, which we've looked at. So keep a note, that's one of the better ones going into next week. New Zealand franc to the downside, franc yen to the upside. We're also going to be looking at US dollar CAD to the downside as a good one, which we've just looked at. We're also going to be looking at New Zealand CAD to the downside and CAD yen to the upside. We're also going to be looking at pound dollar as one of the best setups, which we've already looked at, pound New Zealand to the upside and pound yen to the upside next week. So one of the top markets based on the portfolio selection then is franc yen. Now this is a market I can only be a buyer of next week. I cannot sell this market. What I want to see is, because you can see volatility has dried up. So when you get volatility drying up, this is where you start to get into breakout trades, right? You want to see volatility doing this. And if you're trading mean reversion or you're buying into weakness, selling into strength, you just kind of step back, because if you get involved somewhere here, this thing could snap higher very sharply as it breaks out or lower very sharply. So what I'd like to see first is I'd like to see that breakout take place first. And I'd like to see this breakout to the downside, because overall, this is a market that should be going up. So any kind of sell-off back down below the moving average into the 195.91 is where we turn oversold during the week. And in this case, I'd be looking as an area of confluence for the stair-step high, the 195.59. So this is where I'm going to be looking for sellers to get trapped and for a 1 or 2 day reversal back inside the range next week. Next is New Zealand franc. Now I can only short this market or do nothing next week. I cannot buy this market. And if we look over here, you can see there's nothing but air between the upper bound and the prior high. But what we do have is we do have a larger range taking place over here. Can you see how we've got the high, we've got the low. We break through, or we attempt to break through the low, and we fail. And then we make our way back up to this high. We attempt to break through, we pull back, and we fail. So what I'd be looking for next week is I'd be looking for New Zealand franc, look at the moving average starting to oscillate into a range. So I'd be looking for this to start to push up, trade into the sell zone, which is where we turn oversold next week at the 0.46225, and into the range high over here, which we had a false breakout, pull back, and a retest. And this is a type 1 key area of resistance, because this really pushed price lower in the past. So I'm going to be looking for that for 1 or 2 days to the downside from this area next week. Next is CAD yen. I can only be a buyer of this market next week. I cannot sell this market next week. Very much like franc yen, it's going into a tight consolidation. In fact, I'm kind of making higher highs. So this is where, if you take this high, which is the first primary high it's attempting to break out, if you start to get a breakout above there, you kind of get halfway towards the target and pull back. You can look for that kind of intra-week breakout, especially in these kind of very strong versus very weak currency pairs. But what I want to see personally is I want to see the market come down and trade below the 112.94. This is where we get that oversold reading next week. Now, in this case, the prior daily low is a little bit deep, so we're going to drop down to the 4-hour chart. And as we do that, you can see the first thing is that this market is consolidating. So consolidation is like this, it tightens. A range, it kind of oscillates. And what we want to see is we want to see this market start to range, because this is for breakout trading, this is for range trading. So I want to see this actually sell off next week, breach the 112.94, and this low right here in the 4 hours is where I will begin to look, the 112.74. I'm going to start to see if we can get, on lower time frames, 1 hour, 15 minutes, 5 minutes, can we start to lack momentum? And that's the sign that this is setting up for a potential liquidation, because as you see sellers pushing down into this price, usually 2 things have to happen. One, you have to start to see sellers losing confidence. If the market comes straight down, unless it's kind of capitulation low, it doesn't usually pop straight back up. Usually it will pull back and then it will make another attempt, and it will try and you'll see in the price chart, sellers are actually losing confidence every time this pushes lower. And that precedes sellers scrambling for the exit and pulling their position. So that's what I'm going to be looking at for a 1 or 2 day reversal to the upside next week. Next is New Zealand CAD. I can only short this market next week or do nothing. I cannot buy this market. This has a really nice type 1 resistance level at the 0.80054 in the daily chart. So I want to see this pushing up next week, breaching the 0.7989. That's where we turn overbought during the week. Look at the moving average. We're oscillating, but I only want to be looking for short positions. So as we start to push up, if we can get this and we trade into this high, then I'm going to be looking for buyers to fail and for a liquidation back inside the range for 1 or 2 days. Next is pound yen. Again, I can only buy this market or do nothing. I cannot sell it. What I really like about this is because it's quite a strong market, again, you can see the prior low is too far away. So although they're the best kind of supports, we can, in this case, defer to the prior high. So it's trending, it's stair-stepping if we get this pullback. And so, and you see it over here, there's a breakout here. It actually kind of fails. Then it pushes through and stair steps and then it continues. So what I'd like to see is I'd like to see pound yen first of all break out of this consolidation. Because if you get involved here with a long position, you know, you can liquidate for 2 or 3 days before you bounce. So I'd like to see this break first, trade below the moving average. The moving average will start to flatten and that will turn into a bigger range as opposed to a tight consolidation. This is the high over here, the 208.94, that I'm going to be looking for the market to test and at the same time turn over sold during the week. That's where I'm going to be looking for a bounce for 1 or 2 days. Now, because it's stair stepping, as you can see, and again, we go through this in the strategy guide, I'm looking to capture 1 or 2 days and we go through the reasons why in the guide. But these are the kind of setups, you know, if you're more of a swing trader and you want to hold for a couple of weeks, that you can see the bounce, it kind of consolidates, and then you get the follow through to the highs. Now, if you start to look for bigger profit targets, your win rate will go down. I prefer to have a higher win rate, again, for reasons outlined in the strategy guide. But you could look to swing trade this through the highs, just like it stair stepped here and made new highs. So I'm going to be personally looking for 1 or 2 days reversal to the upside next week in pound yen. And the final currency pair we're going to look at before we move on to the commodities is pound New Zealand. Now, what I want to see in pound New Zealand is the following. I want to see this market pull down. And you can see this is in a big range. You know, this is a market that's really ranging. In fact, last week it pushed into the weekly upper bound and we had a really nice 2-day reversal. It was quite difficult to time because of the New Year's holiday. You can see it kind of gapped and it got very liquid. But it went above the upper bound and reversed for 2 solid days. So these 2 down days here, this is exactly what I'm going to be looking for next week. Again, it's this kind of range reversal play that we go through in the strategy guide. We break down below the moving average is oscillating. It's not contracting really tight, which would be a more of a breakout setup. It's loose. Price action's loose and it's ranging. We turn oversold during the week below the 2.3132. And this is the type 1 support level that I'm going to be looking for sellers to get trapped. They try and break down here and they end up liquidating their positions. You get a reversal for 1 or 2 days to the upside. Wrapping up the watch list this time with crude oil before we move on to gold and silver. What I would like to see is again, what you actually have is quite an interesting setup here because crude oil is actually doing this kind of range play that we look at in the strategy guide, but it's doing it on the way down. You see this very often. So for example, a market is moving down, but it's actually also kind of ranging or it's kind of choppy. So what I would like to see is I would like to see it break this range and I'd like to see the moving average kind of turning flat and even oscillating. And I'm going to be looking for this to breach the weekly upper bound at the 60.61. If it does that, we have a really nice type 1 resistance level here. Another one just above it. I mean, there's a whole bunch of them here. I think buyers are going to really struggle to breach at least the 60.82, especially, you know, through these highs over here. So this is going to be the setup that I'm going to look for next week. If we get this, I'm going to be looking for a potential short back down towards the moving average, this kind of range play. If the market does not turn overbought next week, then I will not be trading crude oil next week. Okay, so wrapping up the video with gold and silver and starting off with gold on the kind of 4 time frames here, you can see intraday we're actually stuck in this range. And last week, in fact, price sold off. If you go back and look at the previous weekly forex forecast, we traded below the weekly lower bound and we bounced. We traded below the weekly lower bound for a double bottom and we bounced. So there were actually 2 significant rallies once we started to turn oversold below the weekly lower bound in hedge dash last week from the video. But coming into this week, we're stuck in this range intraday. Now, if we look at this, there's a slight issue here, which is that on the daily time frame, we've started to close below the prior high. In very, very strong trending markets, you should just break through with momentum. Break through with momentum. So this doesn't necessarily mean we can't make new highs, but what it does mean is we're starting to lack momentum. That is definitely what it means. And if we have a look at this on the monthly time horizon, is it a surprise? You know, we extend away like this and then we start to consolidate. And look at the distance here between current price and the moving average. So I do think gold can potentially retest the highs from last year, but I do think once we start to retest these highs, maybe in Q1, we're going to go into a larger consolidation in gold. And if you notice the thumbnail at the beginning of the video, that was a picture of silver. And I'm going to show you next why silver is showing signs that it's about to also go into a significant long-term consolidation. So looking at the levels in hedge dash for gold, you can see that I really only want to be a buyer of this market. I do not want to sell this in this area, because when a market is this strong, really we just want to be focused on buying dips. Gold especially, but both gold and silver at the moment, they do kind of go up over time, especially gold. So it's not great to short anyway. So I still do favor dips for bounces to the upside below the 420910. We have a really nice daily level here. And if we do start to sell off, what do you notice? We're going into a kind of bigger range or a bigger consolidation. The moving average is now flat. So instead of trading above the moving average, and trending and stair stepping, we're now going into a bigger range. So if we break down here and we test this area, the moving average is going to do this, and then it kind of goes up. And sometimes it can do that and test this for a while, and then you get the breakout and the resumption to the upside. So the specific setup I'm looking for next week is a trade below the 4209.10. So that's not me trading below that. That's price trading below that, turning oversold during the week like it did last week. And in this case, we have a really nice type 1 support level at 4171, which I'm going to be looking for 1 or 2 day bounces to the upside in gold next week. And finally, we have silver. Now looking at this on the 4 time frame chart first, because this is the picture from the thumbnail for today. And in the thumbnail, I say this is bad. Now, why is this bad? Because you have this kind of pattern setting up where you have a very, very, very strong wick on this candle. Now, the reason why I use this for the thumbnail is because I want to tell you something which is very, very important when looking at these kind of wicks. When you have a candle like this, which closes below the 50% level of the candle, you can get very, very, very sharp sell-offs pretty much in the next candle immediately. In fact, it's quite a good setup, especially if you use that, with multi-time frame analysis. Now, in the case of silver, you can see we just about closed over the halfway mark. Now, what this suggests to me, and again, we're talking about probabilities, but what this suggests to me is that silver, although it may pause briefly, it still has enough in the tank to make a run towards the highs. So I do think we're going to see silver potentially revisit the highs, but just like gold, I think we could end up with double tops. And I think that could pretty much be, all she wrote for these metals for, perhaps even the rest of the year. So I would like to see silver pausing. I do think we still in the bigger time frame have, maybe it pauses for 1 or 2 months and then makes another run up because we did close above the 50. But even if we do make a run to the highs, the fact we have such a big wick on this candle tells me that momentum is now out of this rally. So whether it reverses from here or whether it does have the legs to make new highs because it closed over the 50% mark remains to be seen. I suspect we'll make new highs. And if we look, another reason why I think this is, if we look at this kind of breakout on the weekly time horizon, we've got the big run up and we've got this kind of sell off. We are still showing momentum, and very much like I said earlier on in the video, if you have momentum, very often the market doesn't normally V top or V bottom very much unless you've got a blow off top, which this could be. But very often it will at least make one more rally, and then if it fails at the high, a bit like what you're seeing in gold, then it tends to double top. So for those reasons, I do still favor long opportunities in silver, but just bear in mind, this market is extremely volatile. If you are buying dips in this, you should probably reduce your position size because this thing is moving, sometimes even 10% in a day at the moment. So looking at the levels in hedge dash for silver, we turn oversold next week below the 69.18. This is where we enter the buy zone. But notice one of the problems here. And if you actually remember, for those of you who watched last week's video, I did warn in last week's video when we were at this high right here, we closed here, and I said to you, I showed you the data from the prior years and the prior times we had this kind of run up, and I said to you guys, we could really easily see a 10% down day. And on the Monday, I mean the very first day of the week, we get this 10% down day. So you do have to be a little bit wary of that. Now that's happened, there's probably more chance of you can buy the dip. In fact, we still had a nice rip higher after we sold off. But what I don't like about this is that we don't really have any significant high until the 64.66. It means there's nothing but air between where we are now and this low. So yes, we turn oversold below the 69.18, but I really usually like to see some kind of confluence to go with those oversold or overbought readings. So you do need to be careful if you are buying a dip in this next week. As we have no daily support or resistance levels to use, we can defer to the 4-hour time frame, which has a nice type 1 support level here at the 68.15. So if we do get a pullback and we turn oversold next week below the 69.18 and we trade into the 68.15, I will consider, even though I'm a bit wary of the volatility, you know, you can actually just reduce your position size, but I will consider an opportunity for a 1 or 2 day reversal back inside the range. I cannot sell this market as it currently stands under any circumstances. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.